Hello, Oracles. Well, as we discussed this morning, based on the Fed's hawkish stance that we heard about at the Jackson Hole Symposium, we anticipated another red day today, and sure enough, we got that. Tesla was down just over 1%, as was the Nasdaq, and the S&P was down just over 0.5%. Tesla still outperforming the market slightly despite being down. Now, looking at the charts, Tesla bounced right off of the $280 support that we had. This was great to see. We are consolidating very nicely between 280 and 312. And those of you who have been following the channel for a while know that I am both technology and time challenged. So this weekend I'm going to take some time to put aside to work on creating videos to put all of these charts up on the screen as well so you guys can see them, because I know visuals are very important for a lot of people, myself included. So I'll get these up here. So I'll run through the numbers now, working on it this weekend. So 280 to 312 is the nice channel that we are consolidating in at the moment. If we break below 280, our next support is at 245, which is right below that $247 gap. And now I realize that that is a 10% drop from where we are currently and almost a 20% drop from where we were post-split, but we have seen movements like that over the course of this year, so I can't rule it out. It's just something that I am paying attention to. So that is what I'm eyeballing at the moment based on how the charts are looking. If we do break below that, I would not mind getting to that level, bouncing off of it and coming back up. Above us over 312, our next resistance is $326. So we do have that $300 psychological resistance that often can, play a little bit of a bounce here and there. We'll see how we go when we get to that level. But as of right now, the sentiment and feel of the market is more of a risk-off environment. Volume today was pretty darn low for Tesla at 41 million shares trading hands, which, post-split, that's pretty low. We should be looking around near 70 million shares, but right now we're at 41. Pretty low volume. Again, we've spoken about it before. August is typically a low volume month. Going into September, we will pick volume back up. The volatility index, the VIX, is right in the middle at neutral, not swinging either direction. So right now it's just kind of like a waiting. We're in a holding pattern at the moment. So the consolidation is nice to see. I think we're going to break one way or another very soon. We're coming to the end of the month, and then we have the CPI data coming out. We have CPI and PPI data coming out. I think that is going to move the stock one way or the other. It's going to move the entire market, and that entire market move is going to move Tesla in turn. Right now, the market is pricing in a 70% chance of a 75 basis point hike come the FOMC meeting on September 20th and 21st. So chances are, if we get a lower than expected CPI reading coming in, then we might actually see the market change their stance, and maybe the market itself will anticipate the Fed's going to do a 50 basis point hike instead of 75 basis point hike. That might be our turn to start moving back up again. So again, following the cup and handle, following the consolidation we're in, many times when you are in a consolidation phase like we are, it leads to a breakout or a breakdown. That usually comes with some sort of catalyst, and right now when it comes to Tesla specific, unless we get something about their credit rating being upgraded over the next couple of weeks, the next real catalyst for Tesla isn't coming until the end of September for AI Day 2 on September 30th. So between now and then, the catalysts that we have are going to be macro related. So that's CPI, PPI, FOMC meeting, and then any other data points that we have coming along the way. And in the morning, I'm going to break down all of the catalysts we have for Tesla stock between now and November, just so you guys have the dates. I usually try to do it once a month so you guys can put in your calendar all the different dates to pay attention to see what is coming up for the stock movements, any news that's coming out, anything we could potentially see for, a great run coming, which I definitely anticipate seeing coming at the end of Q3. So I'll break that down in the morning for you guys. And one macro catalyst that not a lot of people are talking about is the quantitative tightening that the Fed is going to be doing. As of September 1st, which is this Thursday, they're going to be doubling the amount that they are running off of their balance sheet, going from $30 billion in treasuries up to $60 billion, and going from $17.5 billion in mortgage-backed securities to $35 billion. So what this means is they're literally taking money out of the economy. So this is why many people are saying that the dollar is getting stronger, and a lot of times you don't want to keep your money in cash. usually say, cash is not going to be worth as much in the future because of inflation. The Fed likes to keep an inflation rate of 2 to 3% on a balanced annualized basis. So that just means that over time, your money becomes less valuable. So if you put it into an index fund where it can grow to 7 to 9% annually, it's better to have your money in the market like that than it is to keep it in cash. However, in a market that we're in right now where there's not a lot of growth going on, kind of a sideways bearish type market, potential stronger recession coming, a lot of uncertainty still to come over the next 12 months, especially with further quantitative tightening coming, maybe having your money in cash isn't a bad thing. So this is for me because nobody knows how the future is going to play out. I dollar cost average because dollar cost averaging, we've been through times similar to this in the past, 2008 and 2009 recession. If you were investing your money with a dollar cost average strategy, you made out pretty well afterwards because fortunes are born during bear markets. And while we're not technically in a bear market for the NASDAQ anymore, it's still not a pretty bull market by any means. So with that said, keeping the cash on the sidelines and investing a little bit here and there may not be a bad thing, especially as the Fed is taking money out of the economy because that is going to increase the value of the dollar. And now I know it's hard to wrap your mind around that thinking, well, inflation is as high as it is, so is my dollar really worth all that much? It is in the broader sense of everything when you're looking at it, when you're saying, hey, well, my dollar is going to be buying, stocks at lower prices right now. So if you're looking at straight investments versus like your groceries and things like that, inflation is trending down, still very high, but it is trending down. So as inflation trends down and the strength of the dollar goes up, that means that investing in stocks and companies at suppressed PE compressed prices where they're at right now means you can basically get a better bang for your buck on companies as you're buying them. So that's why dollar cost averaging works because, again, over the next 6, 12, 18 months, not sure how far we're going to come down. Maybe we don't pull down as far as we did before. So much uncertainty. So investing your dollars right now on a dollar cost average basis has historically shown to be the best way in the long run to grow your wealth. Not financial advice, but historically this has been a proven fact. So some people try to time the market, but for me it's more about time in the market is better than timing the market. So I want to keep my money time in the market, but I'm still playing it wise. So for those of you who are newer to the channel, my strategy right now is I'm investing $20 every day into Tesla. I do it fractionally through SoFi, and then I have 10% cash on the sidelines, which I use, and as we dip further down, I add more and more into Tesla as we come pulling further down. This way I can do both dollar cost averaging in case we do go on a run, and if we dip lower, I can actually lower my cost basis at the same time. So that's just my strategy. Again, not financial advice. It's what I'm doing, but I have been very successful with it over the course of this year. So that's pretty much it for the macro environment and different catalysts that we have coming up there. Again, I'll go over the other catalysts for Tesla in the morning. Going back to the charts, we have RSI that just pulled a little bit below 50. So RSI, as you consolidate, can tend to trend down a little bit. This isn't a bad thing because that gives us room to run if we do end up breaking out. So to me, this is a good thing, bringing the RSI down. The RSI is the relative strength index that indicates, whether the stock is overbought or oversold. Anything over 70 is considered overbought and usually indicates there's going to be a sell-off coming. Anything that is under 30 is considered oversold and usually indicates that there's going to be some buying pressure coming in shortly afterwards. So just some key notes that I take into account and pay attention to. And again, the charts are just one aspect that I look at. It's kind of like the textbook that I go through when I am studying something when it comes to the stock market. And then it also comes down to news, sentiment, macro environment, a lot of other factors. But following charts has really helped me keep my emotions in check. So we're seeing the stock pull down. And if you see the stock pulling down really low and you're like, why is it pulling down this way? Maybe your emotions come out and you're like, should I sell? Well, looking at the charts and saying, oh, okay, well, I can see why we're pulling down. We have sentiment that's going in that direction. The fundamentals of the company are still strong. And to me, the fundamentals are the number one thing that I pay attention to when it comes to the company. I'm a long-term investor, but I do pay attention to the stock market on a daily basis. So when I see the stock pulling back and I see the fundamentals are strong, to me, I look at a baseline of the stock price and I was like, all right, well, where are we on what I think is the fundamental baseline? If we're below that, to me that's a great buying opportunity. I'm going to take advantage of it. If we're above that, oh, that's awesome. I'm going to enjoy the ride while we're up there because we're going on a nice euphoric run. And those are always fun for everybody to go on. Let me know your thoughts in the comments below. What do you think the market is going to do when we get to the 1st of September and the quantitative tightening doubles? Let me know how you think the market is going to react. Do you think Tesla is going to continue outperforming the market the way it has been and consolidating in this channel? Do you think we're going to break down and fill that gap? Or do you think we're going to end up breaking out and going over 312? Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat, that link is down in the description, and if you'd like to support the channel any further, I do have a Patreon, that link is also in the description. Thank you so much, have a great one.